Last week, there was a lot of headlines that OpenAI, the company behind ChatGPT, was valued at $500 billion during employee share sales in October of 2025. To put this into perspective, that makes OpenAI one of the largest private company on this planet. OpenAI's latest valuation was not a typical fundraiser or a primary issuance. Instead, the current and their former employees collectively sold about $6.6 billion worth of their shares, allowing them to lock in some gains. The buyer consortium included SoftBank, Thrive Capital, Dragoneer, MGX, and T. Rowe Price. Because no new equity was issued, OpenAI as a company didn't make any money. This transaction is called a secondary sale, right? It's from some people who already hold the shares of the company to be sold to some third. Because no new equity was issued or created, this transaction is called a secondary sale. The proceeds went into the seller, the employees, rather than into OpenAI's balance sheet. Well, the best question we can ask is how long did it take for the company to jump from $300 billion to $500 billion in valuation? So in earlier this year, March, April of 2025, the company was valued at $300 billion when OpenAI raised about $40 billion through a fundraiser led by SoftBank. And as we mentioned earlier, in October 2025, due to employee share sale, the company is valued at $500 billion. So that's 6 months. We saw a 66% growth in valuation. Okay, so that's an annualized growth rate of 178% for the market cap. And if we take the first data point, which is January of 2023, when we first understood about the company's valuation, back then was $29 billion, just 2 months after the release of ChatGPT in November of 2022, okay, when Microsoft invested into the company from $29 billion back in January 2023 to $500 billion to now, October 2025, we're seeing an annualized growth rate of 148%. So just a couple months ago, SpaceX was actually the number one private company in the world in terms of valuation. It was valued at $400 billion in July of 2025 when there was some internal share sales, okay? But because OpenAI is valued at $500 billion in October, which surpasses the SpaceX $400 billion now, which means OpenAI is very likely to be the most valuable private company on Earth today. So what's the implications for retail investors? Can we get our money working in OpenAI? Unfortunately, it's impossible for retail investors because it's still a private company. So OpenAI's shares are not available on public markets. However, retail investor can look into buying other publicly traded companies that are either partners or invest in OpenAI, such as Microsoft. We have Nvidia. Or investor could look into buying ETFs, like there are a bunch of AI-themed ETFs. However, for long-term investors, I believe ETFs are a better way to go compared to buying individual stocks, right? Because stock picking comes with risks. However, I don't think retail investors necessarily have to rely on niche AI ETFs to gain exposure to this sector, because one of the most effective and simple way to do this, I personally believe, is through one of the most popular broad market index fund, which is QQQ. In QQQ, there are a whole bunch of AI infrastructure companies. The best, top, biggest AI companies are in QQQ because the Magnificent Seven all have something to do with AI. If you think about it, we have Nvidia, that's the largest chip designer designing the GPU used to train the AI models. We have Microsoft, which is a direct investor into OpenAI. And Microsoft also have a bunch of data centers, right? We have Amazon, who have cloud service data centers. Alphabet have data centers and also have its own AI models. And if you think about AI application leaders, they're all in QQQ. We have Meta, who uses AI models to recommend content on the social media. We have Alphabet, the parent company of Google, that deploys Gemini across all the apps. They even put Gemini in YouTube now. And we have Tesla, who develops autonomous driving using computer vision, which is also AI. And Apple try to integrate AI through so-called Apple Intelligence across different devices, right? So pretty much all the top Magnificent Seven stocks are in QQQ, and they are huge. Right? They're huge. The Magnificent Seven stocks are Apple, Microsoft, Nvidia, Amazon, Alphabet, Meta, and Tesla. They make up about 40% of this ETF. And in terms of sector exposure, the tech sector in QQQ is about 57%, and the communication services sector is about 13.4%, and consumer discretionary sector is about 17%. So as we can see, it's very, very heavy on tech and communication services, and almost all the stocks in those sectors have some to do with AI, which means in the future, QQQ's performance will rise and fall with the US tech and communication sectors, which pretty much all have something to do with AI. So I personally think QQQ is one of the best way to go to gain exposure to AI. Thank you very much.